You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 11122. That's 11122. And if you're a numerologist person, please send me an email. Let me know what that means. Is it good, bad, or ugly? KL@kerrylutz.com. That is the email address. Well, right now we've got Mark Yegge with us. Mark, successful investor, successful business person, has built and sold several businesses for substantial money. And his site is destinycreation.com, and you can go to destinycreation.com/FSN, and special offer for you there. So creating your own destiny, from what I've gathered on your site, Mark, it starts with the right investor attitude, the right attitude towards managing your finances, towards building, creating wealth. What are 5 things that any of you listening to this show can start doing immediately to change all that?
Well, yeah, first of all, thanks for having me. But yeah, the mindset is 90% of investing. So, I handle 7 and 8 figure entrepreneurs and investors, and I help them play offense and defense in their investments. So it's not all about business for me. It's really all about navigating this crazy, insane, complex, yet simple economic landscape out there. But it does start with mindset, Kerry. And if you have a good mindset, you can kind of navigate through some of these crazy waters that we're experiencing, and we're going to continue to experience it as the Fed starts to crank up things. So the first step is you need to start with a good mindset, a mindset that things are all going to be okay. But mindset also comes from my belief that you have to eliminate emotions in your investments, right? In your decision making, because emotions go up and intelligence goes down, and vice versa. So you've got to harness those emotions first, and that way you can get through some of those decisions. Because how often do we, get a stock that we hear on Kramer or Fast Money or read in the Motley Fool or maybe even on a podcast, and we go out and buy it, right? And then what does it do? It immediately goes down. And now we're in that emotional decision-making phase. And oftentimes it's really hard for us to make a really good logical decision. So you've got to harness your mindset first. And part of the next step of doing that is that you have to start taking action, right? I have a saying, never give up your power in your health, your wealth, or your time. And if you don't give up that power, you control the power, you can delegate it, but you can know what's going on when you delegate it. So it's really important that you don't give up that power. And that means that you need to learn to take control and responsibility. One of the pet peeves that I have is that in our school system, we go to school for between 24 and 30,000 hours. And how many of those hours are spent on financial education? Very few, if any, right?
The amazing thing, when my kids all went to a very top-notch public school system, and the first 2, my daughters, at least they never mentioned ever having a financial education course. My son had a pretty extensive one where they covered mortgages, they covered stock market, how to open a checking account, how to balance a checking account. It was a course, and he was going to me, and I was like, hey, I was like loving this. I said, why don't they do more of this? It's like Robert Kiyosaki says, they just don't teach you the most important things. They teach you how to be a good little Prussian factory worker, but that's about it, right? I mean, that's the model of education we have, is to educate people enough so that they could go pump out widgets at the factory, right?
Yeah, no, I learned a lot about the Pythagorean theorem, but that doesn't help me on Pythagorean theorem day. I should have taken taxes. On tax day, I think I would have a lot more useful knowledge. But I know a lot about Romeo and Juliet, really depressing, tragic story, but I don't know how to buy a house or how to finance something, or I don't know about credit scores or negotiating a car, things like that. So my big pet peeve is that people need to take action and responsibility for what they don't teach us in schools. Unfortunately, we have to, those are electives, right? Financial education is an elective and it should be a requirement.
Exactly. And that's not to belittle liberal arts education, learning for the sake of learning. But unfortunately, we live in a world where you need skills that you can monetize and turn into income, unless you've been born to some with a silver rattle in your mouth. So you have to know this, and you got to balance it. Knowledge for the sake of knowledge is nothing wrong with, but it ain't going to pay the bills. And there's that guy during Occupy Wall Street. He's going for his master's in puppetry, and he couldn't understand why nobody wanted to hire him, why he couldn't get a job, and that his student loans were just not going to get paid off.
Mystery.
Go figure, right?
Yeah, what a mystery. Yeah. I use money every day, so I think everybody else should learn about it. And I want to help people do that. Then you realize that another step that you can take is that not everything is as it seems, right? I mean, if we've learned anything in the last couple of years, I think what we've learned is that you can't really believe everything you hear. A lot of it, if we start to realize, if you follow the money, a lot of things are programmed for us to, keep our eyeballs on the TV or the news article or the social media, because it's the little sound bites that are getting our attention. They may not be true, but they're true enough to get us to be interested in it. And then we kind of lose control of our own decision making. So we have to realize that not everything is as it seems. And then the next thing is, in this economy where the Fed is printing basically infinite amounts of money, debasing our currency, and I think already defaulting on the dollar, it's a slow default using an inflationary means rather than a hard default, like we're not going to pay you for your bond interest, or we're going to give you a haircut. That's another form of a default. I think we just have an inflationary default going on right now. And what that's doing, I'm a supply and demand guy. So if you have a certain amount of supply and demand, but the supply is infinite, well, then the price of that has to be inflated. And so I'm a cryptocurrency guy. I don't believe in all of them, but I believe in the ones that have high utility. Certainly Bitcoin is an alternate asset, and that plays into that supply and demand equation, right? There's only 21 million Bitcoin going to be made, and if you believe in all the other characteristics of money and you put Bitcoin into that store of value, maybe not the commerce part yet, then I think there's a great case to be made for having sets of alternative assets, tech assets, as I call them. Gold is great, silver is great, and I think everybody should have some of that as a hedge against what's going on. But some of these alternative assets, you can't turn a blind eye to what's going on. I think it's the beginning of a revolution, just kind of like where we were at the beginning of an internet revolution. We kind of didn't know where to put everything and how to place everything. There was a lot of skepticism. I think we're in that same area right now.
Hey, but you got to be careful of cryptos, because there's 20 some odd thousand of them. A lot of them are what I refer to as kleptocurrencies, right?
I love it.
I actually own kleptocurrencies.com, but
nice.
Yeah.
Well, there are a lot of these crazy dog coins that are out there, and these things that have no utility. And you and I both know, we've been around long enough to know that there's a shakeout that always comes after a speculative bubble. And so the ones that are the strongest, usually the ones that are first, that are most resilient, are the ones that are going to stick around. I believe Bitcoin, being a 13-year-old, cryptocurrency that's been tried to be hacked so many times and they haven't been able to do it, it's going to be one of the ones that are around. But number 19,720, that may not have a really good use case or a really good network effect. And in that case, it'll probably be either swallowed up by the others or just kind of go away.
All right. So, but right now it really isn't a currency per se, right?
It's got some qualities of a currency, but Bitcoin itself, to me, is not a very easy currency to use. Certainly not yet. There is a rail behind it called the Lightning Network that will act more like a currency and allow Bitcoin to be more fungible. But there are other utilities out there. I think if you want to talk about cryptocurrencies, I think it goes in 3 tiers. I think Bitcoin is like the Coca-Cola, right? If you wanted to start a soft drink company, you're not going to unseat Coca-Cola. You might try a Pepsi, which I think Ethereum is kind of like the Pepsi, by the way. But Bitcoin will be kind of the digital gold, that store of value. I think it's actually taking a lot of asset value away from gold, and that's why gold has not really done extremely well in the last year, certainly, as Bitcoin has done really well. And so that store of value is that's Bitcoin's main benefit. And then Ethereum has another set of benefits with smart contracts and things on top of it. And I think there are things that are built on top of those networks that are going to be a little bit more like currency. But I don't think currency is going away. I don't think the US dollar is actually going away. I don't think it's either or. I think it all works together. This whole network has been built with the dollar. We use credit cards, we use Apple Pay, we use Google Pay. I think cryptocurrencies will be a part of that ecosystem, but we won't go away from using the dollar every day. You just don't want to have a big store of value in cash, because you and I both know that inflation's ticking probably north of 20% right now. So it's just depreciating if you have it sitting in the bank.
Exactly. Could not agree with you more. So other ways you talk about making 2 to 4% pretty much risk-free per month on your portfolio. How do you do that?
Don't just survive, thrive. The Financial Survival Network.
American Eagle Gold is focused on exploring for a world-class gold deposit on its flagship property, Golden Gate, located in the Cortez Trend next door to Barrick Gold and Newmont Mining's Gold Rush and Cortez Mine. They have produced over 27 million ounces of gold. The company plans to drill and advance its relatively unexplored property and continue to focus on acquiring and advancing gold projects in the area. Vice President of Exploration Mark Bradley was at the helm of the team that discovered and defined Gold Rush and has spent the better part of 30 years working on the Cortez Trend. American Eagle trades under the symbol AEG on the TSX Venture. For more information and to sign up for notifications, go to americaneaglegold.ca.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, not risk-free. Certainly nothing's risk-free, but we use systems of covered calls. I've been doing covered calls since I was a kid. My dad introduced me to Edward Thorp and his teachings. He was an MIT professor. He's still around, but
and blackjack player.
Blackjack guy. He wrote Beat the Dealer, and then he wrote Beat the Market. It's a covered call writing strategy, and we got a modified system around that. We teach people how to do. It returns about 2 to 4% a month, and basically what you're doing is you're the house, and you take advantage of the gambler that's willing to gamble, and he pays you for the ability to take the risk on your stock. It's kind of like renting out your stocks. Mm-hmm. And it's probably beyond the scope of how we do it, but basically we own an asset and we sell somebody else the right to take that asset from us, and they pay us roughly between 2 and 4% a month.
Yeah, it's an option-based strategy.
Correct.
And the risk is low because... Why? Because the worst that can happen is you'll miss out on a gain. But hey, if the market's really getting killed, granted, somebody's not going to exercise, right? But the value of your underlying stock can go way down. So
that's absolutely right.
It relates you to some extent. So I guess, if the market goes down 20%, you're making 2 to 4%. Who cares? You'll come out okay, but the market goes down 60, 80%, which, Mark, you have to agree is a real possibility.
Sure.
Of current volatile environment with unlimited money printing, blah, blah, blah. What do you do?
Yeah. So that really comes from a very simplified version of covered calls, and you can get free YouTube videos on covered calls all day long. We believe in having a system around it, and our system incorporates a market timing component. And when we call it, the market is a red light, green light, or a yellow light. If the market's in a red light, you sell much deeper, so you get a lot more protection on the downside. You still pick up a little bit of time premium as income, but now you're protected if the stock does go down 5 or 10%. If you're deep enough, you get that protection. You actually can make money on the way down, but it's a full system. I can't emphasize enough that if you just do covered calls, you're absolutely right. If the stock goes down 20% on a plain old covered call, you're going to lose some money, and you're going to lose money. You don't make money every single week or every single month in our case either. What we do though is that market timing component is a big part of what we do, and that allows you to be deeper in the money when the markets are going down and taking advantage when the markets are going up. So the system works pretty well.
Okay. So what are your feelings, your thoughts about real estate? We both live in Florida. We've seen tremendous inflation in real estate assets. Is it going to crash tomorrow? What's going to happen?
Well, I kind of think like you do, and I think like one of your prior guests, Rob Kirby, thinks, everything's kind of in a bubble, like maybe even in a rotating bubble. So we're looking at bubbles in stocks, we're looking at bubbles in real estate, we're looking at bubbles even in crypto. We're looking at bubbles everywhere because there's so much money sloshing around that needs a place to go, and people kind of inherently know that they want to keep it in cash. So real estate, yeah, certainly has some bubblicious factors about it, right? But right now it feels like people still want a place to live, and they want a place to live in a desirable place. So we're in Florida, and we know what's going on around here because so many states are basically making it unfriendly for people to want to live there. So they're moving. They're moving because of taxes, because of lockdowns, because of a lot of other different factors, because of weather. So Florida is a beautiful place to live. So I think the bull market continues into real estate, but it might roll in a negative way somewhere else. And I certainly think the Fed is going to play a big role in this going forward, whether they raise rates like they say they're going to do, or they don't raise rates because they can't. That's going to play a big role in what happens to mortgages. Mortgages go up, the interest rates go up on mortgages. Fewer people are going to be buying houses after a while, right?
Okay. So, my feeling was once I saw the government getting ready to super hyperinflate the currency,
Yep.
I felt that this was the opportunity of a lifetime. All you need to do this, to cash in on it, and keeping in mind that inflationary cycles, you don't just turn them on and off like a light switch. They run their course, and an event has to occur to end the inflationary cycle. It's not like everybody wakes up one day and says, prices aren't going to go up anymore, so what's the worry? No, like interest rates go up to 20%, war breaks out, wage and price controls, who knows, even though those aren't really effective in the long run. My point is, if you can find an asset that you can lever up and get cash flow off of,
yes,
you can get very wealthy during inflationary times. And the proof of the pudding is all of these humongous companies and the top 0.1% making more money than ever before, record profits, right? So,
yes.
So what's the best way to do this, Mark?
Well, from my experience, and it was really my dad's experience, when I was growing up in the 70s, my dad made a ton of money during that inflationary period. He started buying lots of real estate. He started developing, and he did essentially what you just said. And that is to buy something with some utility and lever up and ride the inflationary wave. I don't think inflation is going away. I don't care what Jerome Powell says about transitory inflation. I don't care that, the government says it's just for a little while, or that it's a supply chain thing. This is an asset class that if you like real estate, and I don't love real estate, even though I came from a family that loved it, I prefer the stock market, right? It's a little bit more liquid. It's easier to get in and out. But if you like real estate and you know how to play it and you're good at it, I think it's an excellent asset class. It sounds like you are in that and you're in the right space. And you can certainly continue to lever it as inflation stays with us, because it's going to be here for a long time.
So you got to have good credit. Sometimes with certain real estate deals, you don't even need credit.
You don't even need credit, right?
But for commercial property deals, they don't care about your credit, how much you owe, whatever. So that's one way of going about this thing, real estate. Is there any other? The stock market, you got to have, it takes money to make money there, right?
Yeah, I think it's not certainly as leverageable as real estate, but I believe I believe in concentrating within asset classes, but diversifying among asset classes. So I think everybody should have a little bit of real estate, or a lot if that's your thing. You should have some tech assets like cryptocurrencies, possibly. You should have some ownership assets, maybe your own business, and having things spread around, and maybe some gold and silver and platinum. Those kinds of things allow you to be able to weather different storms in different ways. Real estate people will need a place to live. The stock market is a great hedge for inflation. We had a 29% increase in the stock market. Coincidentally, we had roughly the same amount of inflation, I believe, because I can see that most things that I pay for are up about that amount on average. So, having a nice diversified asset class portfolio makes a lot of sense. Within a class, I believe that if you're going to be in real estate, be really good at single family homes, or be really good at strip malls, or whatever it is for you, because it's so hard to be really good and if you're not specialized within an asset class. So I don't believe in owning 500 stocks. I believe in owning 2 or 3, based on what I've learned and my mentors have taught me, and some statistics that I've done. So yeah.
All right. So again, you should go take a look at Mark's site, and just tell us your site again, Mark.
So it's destinycreation.com. And then if you want to go to the special page that we set up here for this podcast, it's FSN for Financial Survival Network. And on that, we'll have different resources and some notes and some things that we talked about a bit, maybe some articles and links.
All right. Excellent.
Your audience can get. Yeah.
Okay, if you got a question for Mark, shoot me an email, kl@kerrylutz.com. Don't forget, go to the site, financialsurvivalnetwork.com. Sign up for your free newsletter. Mark, a total pleasure. We'll definitely be talking with you again.
My pleasure too, Kerry. Thanks a lot.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.